Hello traders, the title of the video is how to master the infinity of the Elliott wave principle. So you may be wondering, George, what is that infinity of the Elliott wave principle? And this is the purpose of this tutorial. I will be showing you here, alright, what is the infinity of the Elliott wave principle, and most importantly, how to master the infinity of the Elliott wave principle. Alright, so if you are an Elliott wave practitioner, Elliott wave trader, Elliott wave student, and you are learning to apply the Elliott wave principle in the financial market, you need to understand the infinity of the Elliott wave principle. Let's get started. I have my drawings on my chart here, and this is to show you the infinity of the Elliott wave principle. So generally, when you are learning about the Elliott wave the first time, it's quite simple. They will tell you that the motive wave or the trending phase is formed of 5 waves. 1, 2, 3, 4, 5. And they will tell you also that the fourth wave should not overlap the first wave, and the second wave should not cancel the first wave, and the third wave should not be the shortest impulse wave. And then they will tell you that after the trending phase, we usually have a correction in the shape of 1, 2, 3. All right. So this is what they will tell you, and it's quite simple, and even a teenager may understand that. But it becomes a bit more complex when we are dealing with Elliott wave, because we want to forecast the market and predict what is likely to take place. Therefore, in order to improve our Elliott wave analysis or use the Elliott wave principle more efficiently, we must understand the infinity of the Elliott wave principle. Talking about the Elliott wave principle, we want to combine the lower degree wave count with the higher degree wave count. So if you count 1, 2, 3, 4, 5 wave, 1, 2, 3, you may think that, okay, it's finished now, all right? And you may say that, okay, that's the end of your wave count, all right? But the Elliott wave count is dynamic, is infinite, all right? In fact, when we are talking about multi-wave, we are talking about 5 waves that are not overlapping, that are not violating the Elliott wave principle. But each time we count 5 waves, it's just a trending phase. But things become a little bit more complex because the Elliott wave is dynamic, is prolonged. All right. So here, suppose you were here, you can 1, 2, 3, 4, 5, and then the price came down, forming a zigzag 1, 2, 3. All right. Then you say, all right, that's the end of the Elliott wave cycle. But what you need to understand is that that wave cycle on that time frame, okay, from that point of view, is just a mini cycle of a higher degree. So what you need to do, anytime you see 1, 2, 3, 4, 5 wave, count it 1. Anytime you see 1, 2, 3 or a correction, call it 1 also. So you count 1, 2, 3, 4, 5, and you see a correction, call them 1 and 2. That's why we can use the first wave, okay, to predict the multi-wave, and we can use the second wave to forecast the correction at the end of the trending phase. The infinity of the Elliott wave combine many, okay, many multi-wave and corrective wave. So this one section here, multi-wave correction. After that, we can have again multi-wave and a correction. But sometimes they get into trouble because they think that the wave count that they counted here is finished and they forget about it. So they don't see the bigger picture. They don't see the higher degree wave count. So they count it, they forget about it, and then they start again here. 1, 2, 3, 4, 5, 1, 2, 3. And they say, all right, it's finished. We will expect another trend, all right? And then they count again, 1, 2, 3, 4, 5. And now they see a bigger correction taking place here, and they are saying, all right, so probably the price went down to the 61.8% of this trending phase, and they say, all right, That's the end of that correction, because this stock is the correction is always ending somewhere at the 61.8% Fibonacci retracement of the prior trend. So they think that here, that's the end of the correction, and trader get into trouble because a bigger correction is underway. Why we have a bigger correction here? The reason why we have a bigger correction there after 3 multi-wave is because those who understand the infinity of the area wave principle do not forget their prior wave count. Now you understand why very often you see on my chart all these lines stuck there. Is because I don't want to forget those wave counts. So those who are using a higher degree and those who understand the infinity of the area wave count, though they have counted 1, 2, 3, 4, 5, 1, 2, 3 here, now they say 1, 2. If they count again 1, 2, 3, 4, 5, and then 1, 2, 3, they will not say 1 and 2 again, but they will add it to this one, making it more. Okay, it's adding the wave count, is adding each time, it's dynamic. So they will say 1, 2, 3, 4. Instead of saying 1, 1 and 2, finish, 1 and 2, finish. But they will not say that. They will say 1, 2, 3, 4. So in that case, they will expect it the fifth wave of a higher degree. And again here, some traders, as they reach this level, they will say again 1, and they will quickly get into trouble because the last correction is quite big. The price pulled back to 61.8% level. They say 1 and 2. But they don't know that there are more to come for a bigger correction. The reason why we will have a bigger correction is that the bigger correction that is taking place here is correcting what? The trending phase that has started here and that has ended right here. So those who are using a higher degree and those who understand the infinity of the wave count will say first wave, second wave, third wave, fourth wave, fifth wave, and they will expect a correction that will correct the trending phase from here all the way here. Though those who were counting 1 and 2, looking at using the area wave, okay, piece by piece, without thinking of the infinity of the area wave principle, we think that the correction has ended here, and they will forget that a bigger correction is underway, and that bigger correction is correcting the bigger multi-wave. The bigger multi-wave is formed of 3 minor multi-wave. So this is the first minor multi-wave, second minor multi-wave, and the third minor multi-wave, and 2 corrective waves. So 1, 2, 3, 4, 5. We have 1 mini cycle ending here, another mini cycle ending here, plus a trend. So 2 mini cycle and a multi-wave is forming the trending phase. But after that, we are having a correction that is correcting the bigger trending phase from here all the way here. And then the bigger correction, 1, 2, 3. But then again, some traders may forget again and say that, okay, a bigger cycle is now completed right here. We should start counting afresh. No, it's again a mistake. So all this 1, 2, 1, 2, and 1 and 2, plus the bigger correction, is again, we can go again and say any multi-wave, because this is again a multi-wave, we will say again 1 from here all the way here, that's 1, and we will say 2 all the way down here. So we have again all these move 1 and 2. And if another trend began again, we put this one 1, 2, 3, 4, 5, 1, 2, 3, we put it here. Again, it's continuing all the time. And we'll add it to the bigger cycle, and we'll say there is a bigger cycle after this big cycle. We have a bigger cycle, this underway, and now we have the third bigger, the third wave of the bigger cycle. So this will be first wave, second wave, and then we'll be expecting another third wave of the bigger cycle. And when that bigger cycle is completed, we will be again starting again another bigger cycle. And the new bigger cycle will become our multi-wave, and the corrective phase of the bigger cycle will become, the second wave of our biggest cycle. This is about, the infinity of the area wave principle. The wave count does not stop, though on our chart here we cannot see all the data in the past. That's why sometimes we think it's finished, all right? But if you can see all the data, if the company has been around for many years, we can see a bigger cycle and know that, all right, for this stock, we reach a point that there is the mammoth, okay, the biggest correction will begin. Suppose you see, okay, one bigger, okay, cycle. What am I talking about? One bigger cycle like this, all right, plus another a bigger cycle like this, all right. Now we have another a bigger training phase. The correction that will start from here will not be a little correction. It's the mother of all correction. Why? Because it will come and correct that bigger cycle that has started here. Okay, the training phase that has started here, that correction will coming down. That's why sometime in the stock market, you may see that the price is some stock may be going out, going out, going out, going out, going out, going out for many years. And one particular year, or few years later, you may see that the stock will retrace, okay, will come back down almost to the zero level, or even, 75% of the bigger or the biggest cycle. So the cycle is never a cycle, it's always a mini cycle of the expected a bigger cycle. You may count a mini cycle, but those cycles, we can put them together as I show you now. Anytime we see two cycles plus a multi-way, that's a bigger multi-way, we will expect a correction. And as we are adding each cycle to another cycle, each bigger cycle to another bigger cycle, each bigger cycle to another bigger cycle, we have a mammoth, a biggest cycle. And at the end of that trending phase of that mammoth, okay, biggest cycle, there will be the mother of all corrections. This is about the infinity of the area wave count. Before we wrap it up, okay, things can become a little bit more complex because, as you can see here, this is what we talk about, the theory and the reality of the market. In this demonstration, I was telling you that the correction is 1, 2, 3. A correction can be a flat correction. There is one example here. You see trending first, price pullback when above the prior high. So that is a warning. Though this thing looks very simple, as I showed you in the previous video that I posted yesterday only, you need to watch that video. The title of that video was how. Where are we? What's the title of that video again? I'm looking in my book, so stay with me as I'm looking for the latest video about Elliott wave. I was dealing with one complex Elliott wave. Where are we? Well, I'm still looking. Forgive me, traders. I'll find it soon. It's somewhere here in my book. Okay, every video that I post, I have it here. Where is it? Where is it? An Elliott wave trader explain his complex wave count. That's the title of the video. Elliott wave trader explain his complex wave count. So check it out. So you may see here it is. You see, instead of having 1, 2, 3 down, you may have a flat correction. And another thing you need to be careful. That's why I'm referring you to that video. Elliott wave trader explain his complex wave count. In that tutorial, we have a situation where we see 1, 2, 3, 4, 5, and then a correction. And then the following move that we have again 1, 2, 3, 4, 5. Though we had 1, 2, 3, 4, 5, you need to be careful. If the following trending phase, you see here, you have an Elliott wave cycle that is completed right here, where my cursor is, trending phase, correction is completed here. If the following trending phase did not go above the 138.2% Fibonacci extension level of this multi-wave, you can discount that multi-wave, that trending phase, as a trending phase. So check out that video that I titled Elliott wave trader explain his complex wave count. Let me say this again because it's so important for what I'm discussing here, the infinity of the Elliott wave count. If you see an Elliott wave cycle like this, and a trending phase 1, 2, 3, 4, 5, if this trending phase or any trending phase after an Elliott wave cycle failed to go above the 138.2% Fibonacci extension level of the prior trending phase, we can discount that new trending first because it should go above the 138.2% Fibonacci extension level of the prior trend. Any new trend must go above the 138.2% Fibonacci extension level of the prior trending phase. If it did not, we can discount that trending phase even if you have a clear-cut 1, 2, 3, 4, 5. So this is one thing that you will face if you apply in the infinity of the area wave principle. If you forget that, you can misuse this principle and label something trending phase that is not trending phase because it has just failed to go above the 138.2% Fibonacci extension level of the prior trend. It's a big warning for traders. One more thing, the corrective phase is not always 1, 2, 3. In theory, we like to use the 1, 2, 3 like this, the zigzag, but we can have a flat correction. Give one example here. Price trending phase, price pullback, price go above the high of the prior trend before coming down. So sometimes some of these move out can confuse traders and think that it's a new trend. So be aware of it. That the correction, we have the zigzag, okay. We have the flat correction, we have the triangle, and we have the combination. So another warning when we are applying this, sometimes the correction may not be a simple correction, but maybe a combination, which means multiple correction. Yesterday, again, in the same video that I titled, Area Wave Trader explained his complex wave count. We have the X wave. The X wave will connect two corrective waves. So when you are applying the infinity of the area wave principle, and the new trend failed to go above the 138.2% Fibonacci extension level of the prior multi-wave, that new trend is a failure of a trend. Therefore, we will label that new trend that has failed as X wave, making the corrective wave a little bit more complex to new area wave traders. So remember, the correction can be a pullback like this, and then X, which means a failure of a new trend, and then another correction before you start seeing a new trend going up. We can't cover everything in this tutorial. That's why I'm using my drawing here to explain to you the infinity of the area wave count. The area wave count is always dynamic, it's never stopping, even if you do not have all the data to see the bigger mammoth cycle that is in place. A cycle is always a mini cycle of an unexpected bigger cycle. Very, very important. And you have to understand the magnitude of the bigger correction in relation to the bigger trend. All right? They are not ordinary correction. If we have a gigantic trending phase composed of many multi-waves, all right, we are likely to see a very big correction. All right? So add it together one by one. And don't forget the previous cycle, add it together and see the higher degree wave count, the bigger cycle that is developing, so you may have a bit of idea what is likely to take place, so you do not buy prematurely, and you may forecast and tell your clients that, look, we are now coming to the end of one of the biggest multi-wave formed of two bigger a cycle and one bigger trending phase. The correction that is beginning now is more likely to be quite deep because it's correcting a bigger motive wave. The wave count is dynamic, is infinite, and we must add it 1, 2, 3, 4, 5 all the time. 1, 2, 3, 4, 5, 1, 2, 3 will become 1 and 2. 1, 2, 3, 4, 5. Remember this. Remember this. 1, 2, 3, 4, 5. 1, 2, 3. We'll come back to 1, 2. 1, 2. Okay? 1, 2, 3, 4, 5. 1, 2, 3. Again, become 1, 2. But as we have 2, 1, 2, 3, 4, 5, 2, 1, 2, 3, 4, 5, it become 1, 2, 3, 4. 1, 2, 3, 4, 5, 1 again, so we add it together, 1, 2, 3, 4, 5. And then we start again, 1, anytime we have 5 equal 1. Say that, 5 equal 1, correction equal 2. 2 means second wave. So you see 1, 2, 3, 4, 5, all right, whether in a lower degree, on a higher degree, or the biggest degree, all right, whatever you call it, all right, that multi-wave is 1. The multi-wave is always 1. The correction is always 2 of something else that is growing, or that something that is brewing, okay, may become bigger. But sometimes some stock cannot go. So what you need to understand that some stock cannot go up to, okay, $1 million. So don't expect the stock, because we see that the area, the infinity of the area of the principle doesn't mean that the stock will go up forever and one day will reach 1 million. Some stock, what we will see, because they can create more added value, at one point the price will come back to the beginning of the biggest cycle. So it goes up many times from a mini cycle, and after the mother of all correction, it will bring it back to the beginning again, somewhere near. We see that in 2008, many stocks that were very, very expensive become penny stocks. So we can say that 2008 we have experienced one of the biggest correction, when many stocks that were very, very expensive, $70, $100, were in the region of $20, $10. So this is a huge, okay, correction, all right? So understand that. On this chart, as you can see here, we see here, okay, this is a trending first, a flat correction, which is a correction. So 1, 2, okay? Now we counted again, 1, 2, 3, 4, all this session, okay? So let me start again, 1, 2, all right? And then we go, so that's one trending first, one correction, all right? Then we start again, 1, 2, all right, 3, 4, okay, 4 is the 4 plus all this here, okay, and then we have again, okay, 1, 2, 3, 4, 5, all right, and now we expect it again, a correction. So a correction is either a second wave or a fourth wave. Did you get it? A correction is either a second wave or a fourth wave of a side of a trending phase. Did you get it? A correction is either a second wave or a fourth wave of a multi-wave. All right. So even the bigger correction here becomes a second wave of another cycle. Sometimes they probably come back to the starting point and then everything start again afresh. Okay, and then you start again 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, and then another bigger correction bringing it again to the starting point. So the trick is to understand, okay, the pattern that is in play for each stock. As you can see here, one cycle ending right here, all right? You see again, 5 waves to this point. Now we are now in a correction, which is a kind of horizontal correction here, a consolidation, some traders may say a triangle. And then after that, we'll have again 1, 2, 3, 4, 5. But that 1, 2, 3, 4, 5 belongs to a bigger cycle. The bigger cycle is this one, first wave, second wave, third wave, fourth wave, and again, we expected a fifth wave of the bigger cycle. But if you look from here, you come from here to here, that's 5 waves, okay? And so on, and a correction down here, but we have a bigger cycle. Always adding the area wave count is never a finishing unless we go back to 0, okay, to the penny stock level, and then we start again afresh. I hope I managed to explain this complex topic about the infinity of the area wave principle to you. I want you to understand this because if you want to continue or improve and become a better area wave trader, you must understand the infinity of the area wave principle. So here it is. I hope I've been useful to you today. This video has been useful to you. If that is the case, please give us the thumbs up. All right. If you think that, George, I'm not very sure about this one, this is another blah, 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 blah. Okay. All right. Let us know by giving us the thumbs down. All right. If you think that this is an essential tutorial that can help other area web traders, well, thank you very much. Feel free to share it on Google+, on Twitter, and also on Facebook. This is the end of this tutorial. If you have any question or suggestion, put in the comment section, and of course, I will be recording another video to answer your specific question. Before I wrap it up, okay, when we want to represent an area wave cycle, which number can we use to represent the area wave cycle? I leave it to you, and I will be recording a video to talk about the number that represent the area wave cycle. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to master the infinity of the area wave principle. Happy talking to you all and speak to you soon.